Okay, good morning, guys. Good morning, your time. So quickly, let's see what we had. Let's have a weekly recap on DSY, that is dollar index. Now, the essence of knowing your direction on the US index, that is the dollar index, is that it gives you better chances of engaging every other pair that is paired against the US dollar, like the Euro USD, GBP USD, USD, and what have you. Okay, so with a clear direction bias on your dollar index, you can conveniently trade every other pair that is paired against the US dollar. So use the USD card, use the USD JPY. You can just follow the direction of the dollar index. And if you are trading against the dollar index, like the Euro USD, GBP USD, then you ought to trade opposite. That is, if the XY is buying, you want to be selling. If the XY is buying, if the XY is selling, you want to be buying. You can see this play out. Now, one of the pair that have almost 98 or 100% correlation, opposite correlation with DXY is a beautiful so a pair that had like a 90%, if not 100% opposite correlation with DXY is Euro USD. Can you see this? Can you see this, guys? Almost the same price action. So before analyzing your XXUSD, you want to be clear on what the market is doing on your DXY. So for me on our DXY, we've had a huge expansion to the upside. From this point up to this point, this is a huge expansion. Let's see how the outlook is on your monthly time frame. Can you see this, guys? So presently we can tell that price just filled up our 1 month fair value gap. We had the fair value gap here. On our 1 month. So price had just filled that up. So I will be expecting, this is your DXY, guys, and US dollar is king in the financial market. So I'll be expecting price to come lower. You can see that we had a clean sweep here, right, on your monthly time frame, and this right here was a break of structure to the upside. So we can expect price to come lower into any of these reference points, as any of this internal liquidity. Markets is booked on liquidity, from external liquidity to external liquidity, from external liquidity to internal liquidity, and vice versa. So there are fair value gaps here. There are volume imbalance here that I'm expecting price to fill up, then for us to have a continuation to the upside. Okay, so what do we do? Okay, so you use your Fibonacci level to mark your range. So I will be taking this off because I prefer to use your Fibonacci level below your 0.75 level. This is it, a 0.705 level, or below equilibrium. Equilibrium is what? Your 0.5. That's our green zones. So I'll be expecting price to come lower, either to this region below the 0.5 or to a premium discount level. This is a very good discount level. Then higher prices. So this is your monthly time frame. This may take quite a number of time for it to play out. So let's delete this so we can have a good outlook on the markets. So what did I do? Immediately I noticed that price had filled up a monthly fair value gap. I instantly go down to my daily time frame to see what I have. And on your daily time frame, you could have seen this. Can you see this, guys? We had liquidity lying below. So we could expect price to, come down a little bit. So right from this point, I was already expecting price to, I was anticipating lower prices. And you can see from Monday 20th January 2025 down to Friday 24th January 2025, we had markets had lower movements. It's created new lower lows. And on your daily time frame, you can see that this was a clean break of structure, guys. Can you see this? This is a clean break in market structure. So I'll be expecting lower prices in this new week. That is 27th down to 31st of January. I'll be expecting lower prices on DXY, guys. Reason being that we had a clean breaking structure on our daily time frame within or after which our monthly fair value gap, can you see this? After which our monthly fair value gap has been filled. So just a brief retracement to the downside before our movement to the upside.